Hi, my name is Elliot Gu. I'm the editor of The Energy Strategist. On a webcast earlier today, I spoke a little bit about the natural gas market, and specifically I did talk a little bit about how natural gas is one way utilities are looking to reduce their emissions of various pollutants from sulfur dioxide and nitrous oxide, and increasingly towards reducing their emissions of carbon dioxide, which whether or not, however you feel about global warming, there's a lot of legislation globally combating carbon dioxide emissions, so it's something that we have to keep in mind as investors, one way or the other. However, I don't want to gloss over the coal issue. The situation is that a lot of people think that coal is sort of this dirty fuel, something out of a Charles Dickens novel from the 19th century, but that couldn't be further from the truth. In fact, if you look at projections from all of the energy statistical bodies worldwide, coal use as a percentage of total demand for energy, as a percentage of total electricity demand, is actually going to grow in importance between now and 2030, not decline in importance. A lot of that growth is going to be driven from the developing world, places like China and India. China already consumes more coal than the United States and Europe combined, and so it's already a huge coal producer and consumer. They open a new coal-fired power plant once every 2 weeks in China. In the United States, despite the fact that you've heard about some coal plants being canceled, the reality is that in a lot of areas of the country, electricity margins are very tight. In other words, when electricity demand is at peak levels, there's not a whole lot of spare generating capacity out there. And as the economy continues to grow broadly over the next 5 or 10 years, those capacity margins are going to shrink even further. And the result is that power has to come from somewhere. And the reality is that coal is really one of the only sources of baseload power capacity out there. So you can bet that coal is going to be a very important part of the U.S. electricity mix 5, 10, 20 years from now, and probably even more important than it is today. So I see coal demand continuing to tick up in this country as well. But I want to talk a little bit about something that's going on globally, because we're seeing the coal market really squeeze higher, prices squeeze higher pretty much all over the world right now. As I mentioned, demand for coal in Asia is very, very high, has been growing very, very rapidly over the last few years. And traditionally Asia has gotten its supply from internally generated sources. China is the world's largest coal producer, as well as imports from Indonesia and Australia. The problem has been, of course, is that China is no longer a net exporter of coal as it was 3 or 4 years ago. Last year it became, for the first time in its history, a net importer of coal. The problem is, with all those coal exports from China off the table, they're having to pull more coal from places like Indonesia and Australia. But there have been a series of problems with that. Recently, you've seen a deluge of rain in Australia, on the east coast of Australia, has flooded a bunch of coal mines there. And that's going to severely impact coal output over the next 6 or 8 months, or perhaps even longer. Some producers there have declared force majeure, which means that they don't have to deliver on their previously agreed coal contracts. So Australia is a little bit off the table here. But China still needs that coal. In fact, the government recently said that because stockpiles are so low, they're banning exports of coal, any exports of coal from China, probably for at least the next 4 or 6 weeks. So China's pulling coal from wherever it can, and that includes Indonesia and, of course, South Africa. The problem with that is that other areas of the world, like Europe, that have traditionally been very reliant on coal exports from places like South Africa, are now having to source their coal from other parts of the world. The most likely candidate is the Saudi Arabia of coal, which would be the United States. The world's largest reserves of coal, though not the world's largest producer, is becoming an increasingly important supplier into markets like Europe. Recently, Consol Energy reported its fourth quarter earnings, indicated that they're currently in discussions with 5 European utilities for 2 to 5 year long-term coal supply deals. Now keep in mind, this is the first time in over a decade that we've seen long-term deals for coal supply between U.S. producers and Europeans. They even said that they're in preliminary discussions for a 10-year supply deal, which is a real sea change in this market. Bottom line, coal prices have been going a lot higher. I expect that to continue. I would use some of the weakest reports that you're seeing from the coal miners over the last few weeks as a chance to jump in, because I think you're going to see these stocks go a lot higher as they start to bring their pricing structure up to the spot levels.